Maddie with Sol Costa Home Loans here. So what I wanted to do today was to shoot a video outlining what the recent increase in mortgage rates has done as far as purchasing power for the typical home buyer out there. So what we're going to do in this video is we're going to go over kind of what the trend of rates has done over the last 3 months and how that will impact your monthly payment and what you qualify for. So ultimately in January 2022, approximately 3 months ago, 3.5 months ago, we were seeing rates just start to kind of tick up, but they were still right around 3%. Now, I'll preface this by saying that the rates in this estimate are not exactly what the rates were at the given time. It was kind of in the general ballpark, but the more important thing is that you understand the trend of what's happened over the last few months. So in January, they were hovering right around 3%. And what I've done is I've taken kind of a typical average sales price of $750,000, used a 20% down payment, which would give us a loan amount of $600,000. And you can see with a 3% interest rate, once you factor in principal and interest, property taxes, and homeowners insurance, it gives us a total payment of about $3,435 per month. That means somebody buying in January of this year, had they put 20% down on a $750,000 home, they'd be left with approximately this payment. Their total cash to close would have been about $165,000. Rates were still very, very good at that time. Now we fast forward to about February, March. Interest rates had already gone up about 1 full percentage point. They kind of fluctuated a little bit between February and March. But again, let's use 4% just kind of as an average. So everything else being the same purchase price, same down payment, it took that $3,400 a month payment, turned it into almost $3,800 per month. So that's an increase of $335 a month just over that 1 to 2 month period between January and February/March. Same total funds to close at about $165,000. Now, where we're at today in the middle of April 2022, again, we'll use the same sales price, same down payment amount. Rates right now are hovering around 5%, assuming that you're not paying any points or any extra fees to buy down the interest rate. So with interest rates hovering around 5%, now we've taken this payment that was in the mid 3,000s per month, and now it's over $4,100 per month. So this same person purchasing a $750,000 home as of today, their payment would be about $4,127 per month. That's an increase of nearly $700 per month just since the beginning of 2022. Now, you may be saying this is, information is helpful, but what does it really mean for me? So to kind of give you something to chew on as far as actual implications, let's say somebody wanted this same $3,435 per month payment. And they had $165,000 just like they would have in January. In order to keep this same payment with this same amount of total funds, $165,000, rather than being able to purchase a $750,000 home, that same home buyer today, to keep the same payment, would be purchasing a home at $645,000. Essentially what that means is the increase in interest rate for a typical home price like this has taken your purchasing power from $750,000 to $645,000. So it's taken over $100,000 of purchasing power away if your goal is to keep the same payment as you would have got in January. Now, this can mean a lot of different things. There's a lot of implications, a lot of economics that are behind the reason why interest rates can change. But from a practical standpoint, what I really want you to take out of this video is, especially in a time like right now, it's easy to look at the interest rate and kind of get sticker shock because of what we've been experiencing over 2020 and 2021 with record low interest rates. Now more than ever, the most important thing to focus on is your family budget. So interest rate, sure, it's important, but you want to make sure, is the home you're going to be buying, based on the price point and based on the down payment and based on the interest rate, is that payment going to fit within your monthly budget? Because while rates may be higher right now than they have been, if a home still suits your needs and the monthly payment is within your budget, then that would be considered a good purchase or something that could still make sense for you even though rates are higher. Now, what I'm telling my clients is there's some economic signs pointing towards interest rates potentially dipping back down in, very late 2022 or at some point in 2023. If that happens, great. We'll definitely refinance and be able to take advantage of those savings when the time comes. But I never recommend banking on a hypothetical future refinance in order to save money, because it may never happen. So you want to be comfortable with the payment that you're getting today, and pretending like a refinance never happens down the road. But if it does, it's kind of just considered a bonus. So the big takeaway from this is, yes, rates are up. Yes, they have reduced purchasing power. But if you just focus on making sure that you find a home that's within your monthly budget as far as a comfort level, then the interest rate is not as important, because you really need shelter and you need a roof over your head. And the interest rate on rent, as cliche as it is 100%. So while rates on a mortgage right now may be 5%, interest rates on rent are 100%. If you have any questions, feel free to reach out. Me and my team would be happy to take care of you. And otherwise, I hope you have a great day, and I look forward to chatting with you soon.